The volatility of the U.S. market increases, but as the U.S. stock market has become more volatile as before, I think the opportunity has also increased. Below is the U.S. stock market scenario following the Fed rate decision and Trump's mutual tariff agreement. Check it out and make the investment as safe as possible. 1. Impact of Fed rate decision. 1. In case of interest rate freeze. Short-term stability. If the Fed freezes interest rates, markets can expect a stable environment. High-risk assets such as tech stocks and growth stocks can be relatively advantageous as concerns about higher rates are eased. Restoring investor confidence. If interest rates continue to freeze, companies with high fixed rates or real estate-related stocks can perform reliably in the long run. Liquidity. If interest rates are not high, investors are more likely to invest in stocks, which could increase demand for risky assets. 2. In case of a rate cut. If interest rates are cut, that much more liquidity will be released into the market, so the stock market may have a positive reaction. Technology stocks and growth stocks, in particular, are likely to rise faster. Lower interest rates lead to lower lending rates, which reduce financing costs for companies, which can have a positive impact on improving corporate earnings. Even overvalued stocks or risky assets can be funded, which can lead to overheating of the stock market. 2. Impact of the Trump administration's tariff policy. 1. If the imposition of tariffs is maintained, consumer price rise. If tariffs remain in place, the price of imports will rise, which could push consumer prices higher. Higher inflation makes the Fed more likely to raise interest rates, so rate hikes continue stock market instability. Trade war continues. If the Trump administration's protectionist policies are strengthened, conflicts with trading partners could intensify, which could disrupt global supply chains and adversely affect corporate earnings. Companies that rely heavily on exports, in particular, could be negatively affected. Rising resource and raw material prices. Higher trade uncertainty could push raw material prices higher, which could negatively impact raw material related businesses or consumer prices. 2. In the event of a customs agreement. Easing the trade war. If the Trump administration removes some tariffs or comes to an agreement, the market may interpret it positively. Expectations for a global supply chain recovery and export companies will grow, especially if there is a U.S.-China agreement. Improving corporate earnings. Lowering tariffs will allow companies to cut costs of raw materials or components, which could lead to improved corporate margins. It's also positive for consumer-related companies, because it can curb rising consumer prices. Stock market positive reaction. Resolving trade uncertainty could reduce risks in the stock market, while export stocks and raw material stocks could rise. 3. Fed rate decision scenario analysis. When Trump administration's tariff policy is combined. 1. Freeze interest rates. Maintain tariff policies. Stock market instability. Rising trade uncertainty from maintaining tariffs could raise downside risks for the stock market despite a rate freeze. Shares of export-dependent companies may remain sluggish, with concerns of rising consumer prices and worsening corporate earnings. Defensive stock preferences. High uncertainty could boost demand for defensive stocks, consumer staples, healthcare and other stable sectors. 2. Interest rate freeze. Tariff agreement. Stock exchange rebound. A tariff agreement with interest rates frozen is expected to improve global supply chains and improve the performance of exporters. As a result, industrial goods and raw material companies, as well as technology and growth stocks, are likely to rise. Stable investment environment. As trade uncertainty could lead to higher economic growth, it could have a positive impact on the stock market as a whole. 3. Lower interest rates. Maintain tariff policies. Upside, but uncertainty continues. Lower interest rates could have a positive impact on the stock market in the short term, but if trade uncertainty from maintaining tariffs persists, we are concerned about worsening corporate earnings in the medium to long term. High-risk asset preference. Growth and technology stocks may respond positively as interest rate cuts loosen liquidity. However, the trade conflict with China and others may continue to be a destabilizing factor. For interest rate cut. Tariff agreement. Best case scenario. A simultaneous rate cut and tariff agreement would also address trade uncertainty in a liquidity-rich environment, raising expectations for an economic recovery. Technology stocks, growth stocks and export stocks are likely to stand out. Full risk on the combination of interest rate cuts and trade agreements could have a positive impact on the stock market as a whole, coupled with the flow of money from rate cuts and improved corporate earnings from resolving trade negotiations. It has a complicated scenario, but one thing is for sure, the outcome of the U.S. stock market will always be long as the U.S. exists. So we should focus on how to buy cheaply and sell expensive within volatility.